Welcome to the show. I'm Megan Nilsson, aka Crypto Megan, your host for today. And today is a very special day. It's Friday the 13th, and the markets are spooked, the world is spooked, everybody is spooked, things are shaky and rocky, and it is the perfect time to get started now in the crypto markets, to start learning as much as humanly possible, because right now I believe we are on the verge of one of the greatest opportunities in human history to start building up our chance at generational wealth by zooming out, building for the long term, and learning everything we can while the noise has died down, the hype is gone, and it's just us, it's just you guys, the people who are going to succeed in this movement by learning everything you can now and positioning yourself for what's to come. So today marks a very special day, not only because it's Friday the 13th, I believe that's lucky, but it's also the beginning of my initiative that is 200 days to the Bitcoin halving. That's about 6 months out from now, give or take. It's about 200 days that you have 200 days to learn as much as humanly possible to get ready for what's to come. And today I'm going to give you some stats on where we are in the market, show you some charts so you understand just how big this opportunity is. So I'm going to be coming to you each and every single day for the next 200 days to get you prepared. My goal is to simplify things as much as possible so you have conviction in what you're investing in, and you can be able to defend it and explain yourself to your family and your friends and feel secure in what you're investing in, because that's the key to having success long term. And my vision for you is that you have a more set it and forget it, less stress, more success approach, meaning most of the traders, the majority of people who try to trade end up losing or breaking even over time with so much more stress than they would have by just having a set strategy and getting in when the risk reward is to the upside and selling on the way to the market top, and then accumulating and acquiring for the long term. So I'm going to teach you guys all of that. I'm going to be giving you daily updates and breaking it down and making it simple for you to understand what's happening and why this is such a monumental opportunity. The founder of Cardano, which is Charles Hoskinson, who I had the pleasure of interviewing this year and holding a fireside chat with, thinks that these will be the most transformative years in human history this coming decade. So you're truly on the verge of something special. So we're going to do this together. Just a little background on me. I'm a high-end crypto and NFT portfolio consultant, as well as Web3 strategy consultant for large companies, investors, and celebrities. And I've been on a world tour all over the world, teaching people about this technology, helping them learn how to invest, understand the opportunity we have now, and how to implement those strategies in their business and to make money out of the Web3 movement, and also to build community, because that's what this is about. The underdogs winning, taking back the power to the people. So you have the chance to work toward financial freedom, to get out of the rat race by learning about how to invest, by getting involved, by building community, asking questions. So that is my promise to you, that I'm going to be here for you every step of the way, and we are going to do this together. Now, the thing that I always tell people is I started out long ago, but when I made my first investment, before that I had been researching about a year before I ever made any investment, and my heaviest investment was in Cardano, and that was on the backs of the last bear market, and I was able to do a 69x with Cardano just by understanding the fundamentals, where it was going, and market cycles. So I'm going to teach you how to do similar things, how to build up your portfolio, and how to take advantage of where we are now. So where are we now, you might ask? Well, we are currently sitting at 425 million crypto investors, which might sound like a lot, but it is so small in the grand scheme of things. And if you take a look at the big picture, where we're actually headed is onboarding 3.4 billion more users by the end of the decade. So just as a starting metric, you may be wondering, how do you know all these metrics off the top of your head? And it's because I have been giving lectures at the top Web3, fintech, and tech events around the world to people who are interested in learning, and now I'm taking that here to YouTube to help you. So yes, you are part of the 425 million early adopters, because if you have a look at the adoption curve, the technology adoption curve, Crypto is the fastest growing technology adoption curve in human history, even passing the internet. So as you can see now, we are in the early adopter phase. And despite the fact that Bitcoin has already been through various cycles and there is a thing called diminishing returns, meaning you'll make less money over time and less X's, you are still in an incredible point to be able to take advantage of what's to come. And today I'm gonna break that down for you bit by bit, piece by piece, okay? So the first thing that's important to understand is the Bitcoin halving. Why am I calling it the 200 days to halving initiative? Because historically, every time the halving happens, the Bitcoin cycle repeats and the price runs up. And I'm gonna break down for you why that happens now and what are the catalysts that are coming up that are important to understand, because if you can get in before this, you'll be greatly primed to take advantage of this next massive bull cycle. Some believe that this could be one of the biggest bull cycles in history. Here's why. So jumping right into it. It's very important to understand what the Bitcoin halving is and how the supply is limited and why this matters. So I'm calling this my 200 days to Bitcoin halving event for a reason. And it's because the cycles of all of the market cycles, they don't repeat, but they most definitely rhyme. They've all been very similar since the inception of Bitcoin, and that is due to something called the Bitcoin halving that's baked in to the mathematical code of Bitcoin, set to happen approximately every 4 years. So about 6 months from now, you're going to witness another one of these events that typically causes the Bitcoin price to increase, and then we see the Bitcoin price and all of the crypto assets appreciate in a full-on crypto bull run. Some believe that this may be one of the biggest bull runs in Bitcoin history. So let's break down what the Bitcoin halving is and why it matters. So first off, the important thing to note is that the Bitcoin halving is an event where mining rewards are cut in half every 4 years, or approximately 210,000 blocks mining rewards are cut in half, okay? So let's first get into the theory behind the limited supply of Bitcoin. To understand the halving, we must first understand the theory behind its supply. The inventor of Bitcoin, Satoshi Nakamoto, believed that scarcity could create value where there was none. After all, there's only one Mona Lisa, one Picasso, and a limited supply of gold. So it was the first time, it was revolutionary. It was the first time that you could make a digital product scarce, and there would only ever be 21 million. So that being said, let's go back over here and understand what exactly happens in the process of mining. So how does Bitcoin halving work? A decentralized network of validators verifies all Bitcoin transactions in a process called mining. And then they are paid 6.25 Bitcoin when they are the first to verify a block of transactions using complex math to add it to the Bitcoin blockchain as part of its proof of work mechanism. So they are working to secure the chain and solve this mathematical formula to create these new Bitcoin and put them out onto the market. So every 4 years, something happens that increases the supply shock of Bitcoin as the rewards are cut in half. So let's go down and read a little bit more. Embedded in the Bitcoin code is the hard cap of 21 million coins. New Bitcoin is released through mining as block rewards, which we just ran over. Miners do the work of maintaining and securing the Bitcoin ledger and are rewarded with newly minted Bitcoin. However, every 4 years, the mining reward is halved, and each halving reduces the rate at which new Bitcoin enters the supply, a process that will likely last to 2140. So these are the previous cycles and how many Bitcoin were rewarded per block to each miner. And currently we're down here in 2024, and we're leading up to the fourth halving, in which mining rewards will drop to 3.125 Bitcoin from 6.25 the previous 4 years. So this is pretty monumental. Bitcoin is a deflationary currency, unlike our current fiat system where the dollars are printed out of thin air and unlimited supply. Bitcoin is capped at 21 million, and every 4 years, it decreases in inflation. So it's a deflationary currency, and we're currently at around 2% and going down each and every cycle. So By 2140, the 64th and last halving will occur and no new Bitcoin will be created. So just imagine when all the circulating supply of Bitcoin is on the market, the pressure that that will cause once this is mass adopted. This is all written into Bitcoin code, and you are among some of the first halvings in Bitcoin's history. So this is a very monumental occasion. So, what is so special about the halving? If a person, a group, or government is trusted to set up money supply, they must also be trusted not to mess with it. Bitcoin is supposed to be decentralized and trustless, no one in control and no one to trust. Since Bitcoin is not controlled by any one person or group, there must be strict rules about how much Bitcoin is created and how it's released. Right? So we go back to that mathematical equation. Nobody can tamper with it. Nobody controls it. And that is why it's such sound, solid money. Okay, so this Bitcoin halving is set to happen around April 24th, 2024, and it is going to be massive. In the previous cycle. So basically, what it's showing you here is that every time the halving has occurred since Bitcoin's inception, price has gone on to rise significantly. Here's the beginning of the third halving, and we're now 85, around time of recording, about 86 to 87% complete. So you've got about 15% left before we enter the next halving and before Bitcoin is set to start its official next bull run. In fact, I believe we're already in the first phase of the bull run, but more on that in coming videos. Okay, so the next chart we're going to have a look at is what I was discussing earlier, and this is the technology adoption curve, one of the fastest growing adoption curves in human history, passing the internet by leaps and bounds, and we are just on track to blow everything else out of the water. Right now, we're 425 million crypto users, and we are set to onboard 3.4 billion more users by the end of the decade. Imagine where these scarce digital assets will be when we 10x the number of users involved in Bitcoin. And I'm going to show you a few other charts to help you really get a sense of where we're at and what an opportunity this is. So here you can see the bigger picture and a little bit of these numbers broken down for you. This is the technology adoption curve shown by a graph, okay? And this is where we're at in this cycle on our journey to mass adoption. And as you can see, with 425 million users, we're right here in the early adopter phase, which is a massive opportunity, right? Internet adoption happened here with 4 billion users, and that was the late majority. But you're not going to be a part of that late majority. You're going to be an early adopter, and that's why I'm pushing this 200 days of halving. Let's go. This is a chart by Plan B on Twitter. This is what I also like to show. These are the cycles according to color-coded dots. As you can see, number one is the blue accumulation phase. Number 4 is the depths of the bear market, and it shows that we have currently passed the worst of the worst, and we are now in accumulation phase. Accumulation phase for me is one of my favorite. It's the worst. It's the hardest. It's slow. It's boring. It's methodical. A lot of people give up and they leave, but this is the time we have to accumulate. And the smart money is coming in now, and they've been in. All right. So this is one of our indicators that now is, according to risk reward, the risk is much lower than the reward. So we want to always minimize that risk by getting in at the bottom of the cycles, or as close to the bottom of the cycles as we can. And so that's how we measure, by all of these different indicators. Here we have another indicator which helps you kind of like visualize where we're at. So as you can see, maximum bubble territory is the red. That's when we're at all-time euphoria highs. Sell, seriously sell, is getting into this orange. The FOMO intensifies in this light orange. Is this a bubble here? And hodl in yellow. We've got to hold on for dear life. Still cheap in the light green. And accumulate. As you can see, we're barely even brushing into accumulation stage. We're still in this buy area, and accumulation is also a buy area. And we just came out of basically a fire sale when I called the bottom, actually, in my Telegram with my private members group on Patreon. I said at 17,000, we were likely to have seen a bottom, and then we went on to double bottom. And I believe we've been through the worst of the worst for this cycle. here you have just another visualization of how previous market cycles have gone. And although they don't look exactly the same, they most definitely rhyme, because if there's one thing that's been consistent in human history, it's emotion. And the market cycles are very similar. If you look at it, if you see here, we've gone through the typical bear market, although we've had different ups and downs, the typical bear market into the accumulation phase and then into the bull run. And this has happened since Bitcoin's inception. And now here we are again in accumulation phase. This is another indicator I like to look at. It's called the pi cycle bottom. I'm not going to get into the specifics about what this indicator is, but just know that it's flashed 3 times in Bitcoin history, and every time it's marked the macro bottom of Bitcoin. And this time it flashed at approximately $19,000 this past August. So June, excuse me. So we've flashed this market cycle bottom. The last market cycle bottoms flashed at the first time was on January 16th of 2015, just 2 days after the absolute bottom of the Bitcoin price at $152. The next time was December 16th, 2018 at $3,122, both incredibly amazing times to buy. And now we're coming on to the third pi cycle indicator, which, as you can see here on Crypto Rover, if we let it load, we'll just go back here. This is where the pi cycle bottom flashed between 19 to 20,000. Is this the bottom of the bear market? I truly believe so. And as a worst case scenario, we could come to retest our base, which I'll show you now. Because you may be wondering, well, if this is the best time to get in historically or to start averaging into Bitcoin, what is the risk reward? What is the worst case scenario? And I'm going to show you that now. So here we have a few charts, and this is also illustrating the pi cycle bottom. As you can see, the bottom flashed here. This is from YouTube channel of Crypto Crew University, Steve. Very fond of his show. I think he breaks it down really, really great for beginners. And as he showed here, we went through a double bottom in the market, and this is where the pi cycle bottom flashed. Now, historically, we've come down to retest this green line before then going on into our bull run. Will we do that this time? That is the question. Right now, it's around, I believe, $18,000. And worst case scenario, I believe we come to retest our base, which is anywhere between $17,000 to $20,000. And we build a strong market structure there. That is not that bad in the grand scheme of things. And if you're investing for the long term, dollar cost averaging during this time is historically proven to be an excellent method. I also want to show you this chart by another YouTuber that I find has been very accurate and very great at mapping out where we are in the cycle and zooming out and looking at the long picture. So he's also lining up the Bitcoin halvings. And as you can see here, this is the accumulation period. This was the COVID dip. So COVID dip or no COVID dip, this is actually very indicative and very common of Bitcoin's cycles. We always go through an accumulation phase, and we might have bigger dips or smaller dips, but we are now in that same accumulation phase before we hit this point, the halving, which is coming right here, April 24, 2024, around that date. And look what the price did last time. Just look how the price appreciated. I mean, I can't make this any more clear how much of an opportunity we have ahead and how easy it can be if you make it easy. So moving right along, this is another indicator I like to look at. This is the Fear and Greed Index. As you can see, we spent a lot of 2022 in extreme fear, built a really solid base down here, and now we're currently testing that base. And the Crypto Fear and Greed Index is one of my favorite indicators. It's so simple, yet so complicated for humans to master their emotions. Basically, it's called climbing the wall of worry. When we're in extreme fear, you buy, and when we're in extreme greed, you sell. I mean, these are all very simple indicators when paired together with the macroeconomic conditions can be so powerful. So right now, we are in fear, and the outlook is grim on the world stage, and this is when we are coming in and paying attention. So, as a recap of what took place this year, BlackRock, Franklin Templeton, and other TradFi giants filing for Bitcoin spot ETFs. Okay, Charles Schwab, Fidelity, and Citadel launched an institutional crypto exchange. PayPal launches a stablecoin in the Ethereum blockchain. Deutsche Bank will start offering crypto custody to institutional clients. Citibank and JP Morgan are both working on deposit tokens on private blockchains. And MasterCard launches CBDC program with participants such as Ripple, Consensus, and Fireblocks. And Visa steps into the game. Okay. Like, this is just some of the stuff that has happened this year. And now, the last thing I wanted to explain to you, and one of the biggest possible factors in this massive liquidity burst of trillions of dollars flooding into these markets, is a Bitcoin spot ETF. So, what is a Bitcoin spot ETF? Understanding exchange. So basically, an exchange traded funds or ETFs are investment vehicles that track specific assets or commodities. So it's basically a vehicle for Wall Street to get on board. And as Michael Saylor puts it, it's kind of like a 6-lane highway infrastructure enabling Wall Street to adopt Bitcoin. As it stands right now, Wall Street, the institutions, they can't invest in Bitcoin because there isn't proper regulation in place. When this ETF launches, then they can allow that to all of their clients. All of these institutions can allow their clients to get exposure to this asset in a way like traditional finance. So it's the same systems that they built for 30 years, working it into that system. And that is when the floodgates will open up and the money will come pouring in. I'm also going to do a video on ETFs coming in the coming days, so stay tuned for that. And now the BlackRock Bitcoin Spot ETF will be huge, and here's why. The forecast is that there will be an inflow of $200 billion in capital, with only 2 million remaining Bitcoin available after the BlackRock Spot Bitcoin ETF can significantly limit supply. The reduced availability has the potential to drive Bitcoin's price beyond $100,000. So just know that there are a lot of speculations on what this could do to price, according to the percentage allocation that BlackRock alone could allocate to this. So this is just another idea of the massive amounts of capital it could come pouring in. So BlackRock, Fidelity, Grayscale, and 6 other asset management giants are overseeing 15 trillion in assets, and they're all seeking approval for Bitcoin ETFs. Wow. And then you see, meanwhile, Bitcoin's market cap is sitting at a $0.5 trillion with so much room to grow. It's astounding. And so the question is, tomorrow you wake up and the BlackRock ETF gets accepted. Bitcoin is at $52,000. What do you do? Well, it's not what do you do, it's what you did. It's the buying now that makes the money. It's the work you put in now when you're truly making that money. And my goal is to get you in before this happens. If BlackRock just invests 0.32% of its funds, it could potentially buy all of the Bitcoin from global exchanges. So just imagine what is going to happen to price if all of this Bitcoin gets bought up by entities, financial institutions like BlackRock, like Fidelity. It's crazy. And one last thing I'm going to go over before wrapping this up, just to give you an idea, is ARK Invest Big Ideas. Kathy Wood, one of my favorite analysts in this whole space, and the CEO of ARK Invest, she is truly a visionary. And this was one of their market reports. And here in their bear case scenario, the base case, they have Bitcoin at going to $258,000 by 2030. So that's the worst case scenario for them. And that would mean a 20% of digital gold, so gold market cap. So taking 20% of gold, of people moving their money from gold to Bitcoin. And then only 1% of institutional investment. So with just a 1% of institutional investment across all of the institutions, their base case would be 258,500 euros. And here it is at a 2.5 and a 6.5, as you can see. 1.48 million, 682,000. So as you can see here, visualized in a different way, their base case for Bitcoin by 2030 would be 8x, 22x, and 50x. And lastly, but not least, one of my favorite guys in the space, Arthur Hayes, who is the former CEO of BitMEX, has a projected mind-boggling price range of 750,000 to 1 million Bitcoin price by 2026. So when asked about the rationale, and this is what I like to do, I like to break down how is this possible. He confidently states, I think it'll be the biggest boom in financial markets we have ever seen in human history. Such a statement may sound hyperbolic to some, but considering the meteoric rise of Bitcoin over the past decade is not entirely impossible. So he pointed out that the limited supply, capped at 21 million, combined with increased global demand, will inevitably drive its price to unprecedented heights. And he emphasized that as more institutional investors like the BlackRocks of the world and corporations enter the space, the scarcity of Bitcoin will become even more pronounced, leading to a surge in its valuation. So, on a closing note, I want to leave you with this. Today was the first day of 200 days to come, where you and I are going to go through this step by step, have a look at the stats, have a look at the data, and build the portfolio from the ground up and just really understand the inner workings of what's going on in this space, from Bitcoin to altcoins to the global macroeconomic scale to the economy to the US government, regulation, everything you need to know on a daily basis about what's going on so you can stay up to speed. And one thing I want to leave you with is this meme, which I think is really funny. This is David Goggins. Obviously, he's a marathon runner and he just never gives up. He never stops. And it says, sellers are getting exhausted. And the sellers looking like David Goggins, just never giving up. So what I mean by that is it's going to get hard. It's going to get dreary. It's going to seem boring. But just know that if you can withstand these next 6 months and get through these next 6 months, no matter what happens, the ups and the downs, we are headed for unprecedented heights. I am sure of it. Of course, there are no guarantees, but I've never had more conviction in my life in anything than I do in Bitcoin. Bitcoin is the future. Bitcoin is freedom. We are here working together toward financial freedom, and that is what I want to prepare you for. So thank you for joining today. Until next time, I'll see you tomorrow.